Welcome back to the Gold and Alternative Investments Show. My name is Kerry Stevenson, and for those of you that do know me, you know that I am an absolute gold nerd, but I love talking to people about investing. We talk about gold, but we also talk about alternative investment opportunities. In a world that seems to have gone a little bit mad, where interest rates are at an all-time low and probably heading lower, what do you do with your money? How do you protect and grow your wealth in this new world that we're living in? Well, today I'm delighted that I've managed to get somebody who is quite hard to get a hold of because he's normally traveling all over the world, but due to the current coronavirus, he's here in Australia and he's joining us here today. His name is Dr. Andrew Tunks. He's the Managing Director of Meteoric Resources. A little bit of background, just so you know who he is, and then I'll explain what we're going to talk about today. He has a Bachelor of Science from Monash University and a PhD from the University of Tasmania. He spent a lot of time, over 30 years, in academia and the resources sector. And he started as a geologist here in Australia in 1987 before going to Africa to work on projects, and has worked all over the world in the mining resources sector. Welcome to the program, Dr. Tunks.
Kerry, you make that sound much more glamorous than it actually is, but thank you very much. I'm delighted to be here.
The reason that I wanted to talk to you today is I've had a number of people asking me, you know, should they invest in gold equity? First of all, gold is becoming, I guess the talked about commodity at the moment. So I've had a number of people ask me, what do I do? Is it gold equities? Is it physical gold? So I talked to them a little bit, but in terms of gold equities, I thought you were a great person, given your background, to explain to people that are looking to invest in the share market in some of the gold companies, what do they need to look out for? What do they need to be aware of? What are some of the pitfalls? What are the opportunities? Because I don't want any of my community to throw their hard-earned money onto something that the local taxi driver said to them was a sure thing.
No, that's a real issue, and there's a lot of online forums that I think you can certainly easily be misled by listening to people without much experience and often vested interests, and not public names, etc. So that's a real danger. Kerry, my life's been in exploration largely, not a little bit of mining, but mainly exploration. I run an exploration company now. So that's really what I'd like to talk about, the smaller end of the market. And so people have to be very aware of what they're investing in, and they have to understand clearly when they go into an investment, what are their goals? What are their time frames? How can they get in? How can they get out? Is the stock volatile, etc.? Is there enough trading done? And that can be an issue for some companies. So can you, when you've made some money, can you get out? Or does it not trade? That can be an issue for companies. But I think the first clarity for me around investing in an exploration company is deciding what it is that you're after. But people have to understand that we do never pay a dividend, right?
And that's really important. I think some people don't even understand that if you're in exploration, you are spending money, you're not giving dividends out to shareholders. So
we only spend money until that stage that we make a discovery and become a mine. But people have to only look at the companies to realize that that's a rare thing. Typically companies get taken over before they get to that stage if they're small and they make a big discovery. But these are not dividend companies. These are companies that you might invest in for that spectacular result. But of course, statistically, by its very nature, many of us don't get that spectacular result, that 100 bagger, but there are companies out there that do it, and that's what creates the excitement. That's why I'm in it. I mean, the excitement of a sand fire, etc. Those companies who make great discoveries. I mean, at the moment, one of the companies that I'm following is Chalice Resources, and Chalice have made a great nickel discovery 170 kilometres from Perth. It's early days, but it's, the stock's gone from sort of 14 or 15 cents to $1.30. Wow, that's why people these companies, okay? And and you have to understand that cycle. And so I just think it's important that you understand why you're investing in an exploration company and what it is that you're after, and what you're prepared, how long you're prepared to wait, how often you want to turn over stocks, etc. So I think that's the first thing.
Yeah. Do you think that people have got an unusual expectation of it's going to happen quickly? Do you think that people look a little bit too short term when they're investing in that smaller end of the market?
Yeah, they do, because exploration is a slow process, and the time it takes to plan a drilling campaign, get a drill rig on drilling is slow, it's expensive, then it takes time for the assays. And even if everything goes right, let's say you have a new gold project and you get on and you drill it, and everything goes right. If you're mining in less than 5 years, you're a world beater, because by the time you drill it out, you develop a resource, you upgrade that resource, you do your preliminary economic assessment, your feasibility, pre-feas, your feasibility, you get your approvals, your environment. All of those things take an enormous amount of time. And so people do have unrealistic expectations about how quickly you can turn stuff around. Now, some of that's created by the industry ourselves, because we're in that business where we have to sell the dream, and we have to keep our companies going, and so we continually put a positive spin on.
Well, you do, but you also are under very strict guidelines from the ASX. I mean, you can't. You say spin the dream, but I'll pull you up on that one and say you can't. And in fact, the regulations around what these companies can and can't say is so strict that sometimes they actually do want to tell you that they've got great results, but they're not allowed to. There is a very strong regulatory thing around exploration. So I think
absolutely both from ASIC and the corporate regulators, but also our me as a geologist, I belong to a professional organisation who monitor the things that I say. I have the JORC code, which talks about how I'm allowed to express results, etc. What I typically meant was that if you're in exploration and you have to be an optimist, and so we tend to look at projects. We tend to always see them in a positive light. We tend to champion our projects, and not just externally to shareholders and stuff, but internally within the companies. Every geo has his own favourite project, and he will continually promote that to his internal management to say, this is the one you've got to spend money on. This is my idea. This is why this can be a mineral deposit. And so that's, investors just have to be aware of that people are putting, you just don't do this unless you're an optimist, okay? Because it's a tough industry, and discoveries are really tough to come by. And so you have to go into exploration with an optimistic point of view.
And I think for those of you who are out there that go, what is he talking about, geo? Because we kind of work in the industry, so we understand it. Yeah, a geo is a geologist. They're the guys that go out, look at the rocks, interpret the geology around the area, and potentially start to put a drill rig in there and look at what might be in the area. And then what they do is that they'll send off maybe some soil sampling. They might look at the rocks a little bit more and go to what's called assay. Assays are just when they send it off to a lab, and the lab will tell them whether, what sort of grade that they've got. So there's a whole process around, you don't just go out and go, oh, there's a gold, there's a large bit of gold, and we'll just dig that up.
We don't. No. People often ask me about gold detecting. I mean, in my 30 years, I've never used a gold detector in my life. We really don't care much about surface gold, because typically it's very small and it's not economic for a company to develop. I mean, there are examples where it is, but typically, alluvials are not the way it's at, and what we're looking for is stuff under the ground beyond detection limits. So
let me stop you there and just, if I could ask you, just because you have a great understanding of this, let's talk to people out there about the difference between the different types of gold.
Sure.
You just mentioned alluvial. And people watching this, they're not
Yeah.
geologists, they're not in the industry. These are people that want to understand gold mining and what are the different types. So if I could just throw that out to you.
Okay, well, I hope this podcast is going for several hours, Kerry, because that's a big question. So, and this comes back to something that I tell everyone all the time. Gold deposits are old. Most of the gold deposits I've worked my life on are thousands of millions of years old, right? From the Archean, most of the Australian gold deposits are in the Archean. Then there are younger ones, you know, and so the Archean ones are 2 billion years old.
Wow.
There's Proterozoic ones around 1800. Then there's younger ones around Bendigo and Ballarat that are 500 million years old. So I often tell my staff and contractors when they're at me or investors when they're at me for a result, this gold has been there for hundreds of millions of years and another day doesn't matter. Okay, it's not going anywhere. So that's the first understanding. Gold deposits and mineral deposits in general are old and geological time is long. So what happens is that typically in the case of gold deposits, that they form at depth under the ground, anywhere from quite shallow, where active deposits, such as in New Zealand at the moment, what we might call epithermal, which really means shallow in a volcanic environment. They might form only a couple of 100 metres below the surface, all the way to shear zone hosted gold deposits, which might form 8, 10, 12 kilometres below the surface.
What is a shear zone? You know, and I know you can put this in a short thing. What is a shear zone?
So a shear zone is a fault, like the San Andreas fault, or, you know, a large fault. Rocks at depth have no permeability or porosity. That means you can't put fluid through them. Gold deposits are not in the rock when the rock is deposited, by and large, right? There are a particular class of gold deposits where we think that there might be gold in them as the rock is formed, but most gold deposits come in and are much younger than the rocks that they're in. And what that implies is that those gold deposits come from a fluid. And so to get the fluid into the rock, I have to break the rock. And that's what a fault is. So if we use the world's most famous fault, the San Andreas fault, that's a fault where two plates are pressing up against each other and sliding past each other. And that break creates permeability, which is the ability of fluid to flow through something, and that fluid brings in the gold. And so the gold is dissolved in water at that stage. Now that water can be saline, it can have other elements in it to carry the gold. This is quite complex chemistry, but what invariably happens in geology is we look at the source, where did the gold come from? We look at transport, how did the fluid transport that metal and upgrade that metal from very low grade background anomalous, so taking on an enormous volume of rock and leaching the gold out of that, sucking all that gold, concentrating it, moving it to somewhere else through a fault system or permeability somehow, and then another chemical reaction where that gold is made to precipitate, so to come out of solution. So if you dissolve salt in a glass and you evaporate the water off, the salt precipitates. It comes back to solid form. Yep. And that's really, precipitation is not a thing under the ground, but different chemical changes, boiling of the fluid, interaction with the wall rocks. There's a whole bunch of chemistry involved, but effectively what happens is I dissolve the gold, I transport it, and I reprecipitate it at much higher concentrations to make a gold deposit. These things alone take millions of years, and they happened millions of years ago, and they happen deep underground. And so after that process, through the process of erosion and continental, what we would call orogenesis, which is mountain building, the gold deposits are lifted up towards the surface. And as that happens, they erode and they come closer and closer to the surface until eventually they're exposed at the surface and sometimes sticking out of the ground. Now, those ones have all been found, right? They're the amazing gold discoveries of Kalgoorlie or Ballarat or Bendigo or, you know, in the west coast of the United States. And so what happens is they start to stick out of the ground, they erode, and that gold is transported along the top of the ground in rivers and channels and creeks. And then eventually it'll get to a basin or in a river that's quiet. So gold's heavy, and it doesn't transport very far, and it gets concentrated in that process. And as that happens, we can form what's called an alluvial gold deposit. That's gold that's taken from somewhere else, transported down the hill into a river, moved somewhere else, and then is mechanically trapped as the river velocity decreases, the gold falls out, and typically, the prospectors know really well how to prospect rivers. It's on the outside of the Big Bend. It's various places where the water flows.
Which is great for prospectors, but not so good for a company looking for an economic deposit. Is that correct?
No, I mean, the big alluvial deposits have pretty much been mined out now. There were some great ones during Bendigo had millions of ounces, the great, places of New Guinea, the great places of Alaska and California, Nevada, but they've all been found because they're at surface, they're easy to find. The challenge for us as an industry going forward is that the easy things have been done. Right. So you have to go to places where that hasn't been done, which involves high political or risk, or risk to your workers, because there's always a reason why someone hasn't been there, and that might be because of war or danger or whatever. So that's so you have to go to places where it hasn't been well explored, or you have to explore deeper beneath the surface.
Sure. So from an investor's point of view, well, I'm going to ask you two questions. So let me get to investors in a moment. But we can send a man to the moon. We've got nanotechnology. We've got amazing ways to create technology and things that make life easier. Has that translated at all into the exploration industry to, I guess, give investors a little bit more of a, what's the word I'm looking for? The opportunity to, what should investors look for? Why hasn't technology played a bigger part, I guess what I'm saying? Because investors don't know what to look for. There's over
absolutely. Technology's played an enormous part, and we do use a lot of technology. We look at gravity, we look at the Earth's magnetic signature, we look at electrical currents beneath the Earth. But gold is tricky. And so there's a couple of things here. Even a high-grade gold deposit. So if we looked at the highest grade gold deposit in the world at the moment, I think being mined is Fosterville here in Victoria. It's close to an ounce per tonne. Okay. Amazing. So what does that mean? What's an ounce per tonne? Okay. Well, if we take that back to metric, out of imperial, that's 30 grams per tonne. That's 30 parts per million, right? So that's someone putting out 30 million yellow Smarties and only 30 red ones, and then you're trying to find the red ones. Just visually, that's an incredibly low concentration. So gold, even super high grade gold, is very low. So that's issue number one, is we're looking for things that are very low concentration, and so they're hard to find. Issue number two is, so how do you address that, is you don't always look for the gold, but you look for the things that helped transport the gold as it was in that fluid. So that can be things like sulfur, which makes sulfide minerals. So pyrite, chalcopyrite, pyrrhotite, arsenopyrite. Now,
my audience won't have a clue what you were just talking about.
They're just minerals. So they're just minerals, okay? A mineral, is things like quartz, feldspar. These are particular minerals that often look like metal. In fact, pyrite is fool's gold and it looks like gold. So they are particular minerals that are often associated with deposits of economic value in gold, but also they carry the metals that we mine. Chalcopyrite and bornite, for example, are copper minerals. Sphalerite is the zinc mineral. These are minerals that we know very well, and they carry the metal bonded to a sulfur atom that we mine, and then we process, get rid of the sulfur so we keep the metal. Now, you see, gold's tricky because gold doesn't have a signature, right? It's not radioactive. It doesn't have much of it, and it's at such low concentrations, it doesn't really have electrical properties in the ground. So what we tend to look for in gold deposits at the start, particularly, is, the gold is very low concentration, but the sulfides associated with it might be at 2 or 3%. Now, it's much easier to find something that's at 2 or 3% than something that's at 30 parts per million.
Sure.
Or 1 part per million. Like a lot of gold deposits now are mining at 1 gram per tonne. That's 1 part. That's 1 red Smartie in a million yellow Smarties. And that's when you're in the ore deposit. That's not looking for it. That's when you're in it. So we use these remote methods to put us in the area. But for gold, that's tricky because, you know, gold is not always associated with sulfides, or it's associated with such low quantities of sulfides that they don't show up on remote surveys. We might say, we might look at magnetics, but I've seen gold deposits occur as lows within highs, as highs within lows. So gold is, I think, trickier. It's much easier to use those techniques that you were talking about for base metals like copper, lead, zinc, etc. Iron ore. I mean, iron ore deposits are so big and iron is so heavy that they affect the Earth's gravity field, right? So we can use. So that means, in very simple terms, and not something that you can see with your naked eye, but if I stand on top of an iron ore deposit and drop a golf ball from 1 metre, and then I move off to a place where there is no iron ore deposit and drop the same ball 1 metre, it'll fall faster over the iron ore deposit.
I love that. That's fascinating. Didn't know that.
Yeah, the iron ore is so heavy that it locally affects the Earth's gravitational field, and the ball will fall, and it's something that we can measure. Now, this is not something you can see with your naked eye. It's a very, very subtle change, but we can absolutely measure those things, but they seldom apply to directly finding gold deposits. They can put you in the area, but they can't locate the deposit itself. And so ultimately, we get into the area that we think might be good for gold, and that's largely based on historical discoveries. You know, what certain rock types are more preferential to host gold deposits, where has it been found in the past, what sort of faults and shear zones, and etc. Then,
okay, so just bringing it a little bit back to the core, which people are asking me, you know, what, as an investor that is just going into this, what should they ask if they're looking at a company and they're going, I've been told that XYZ company is getting some exciting results. You know, how should they go about doing their own research? Because I always say to people, do your own research.
It's very difficult. It is very difficult. Even I, who look at gold companies all the time, whether I'm reviewing projects and stuff, you know, it's tough. But in terms of investment, I think that there are 3 things that I look at first pass. And I'll have to explain these terms, but are they greenfields explorers? That means that they're going into a new area where there's no indication of gold, and they're starting from scratch. Now, statistically, their chances of success are 1 in 10,000, right? That, you know, that they have to start, they have to go right back to the basics and even understand what rocks are there. And that's really early stage. And there's not, in this environment at the moment, there's not a lot of that going on.
Okay. Next.
So the next is brownfields exploration. Sorry, when I say not a lot, there is some greenfields exploration going on, but it's generally in areas that we know produce gold. And it might be a fair way from any gold deposits, but it's in the rocks that we know, like for example, in and around Kalgoorlie. There's no greenfields exploration there because there's giant ore deposits right there. And so you're already in the ballpark. So the next stage would be brownfields exploration. And that's where you can stand on the ground and see a head frame. Now, a head frame is that frame that they build on top of a mine, an underground mine. And so if you can see a head frame, now we're on the field, right? We've gone from being in the park, now we're on the field. And our chances of success are vastly increased. So exploration around brownfields sites has much higher chance of success. And that's why you always see companies saying, oh, this is an old mine, or the old prospectors found gold here, or there are old workers.
So basically they need to go and the first thing is this company looking greenfields or brownfields? And if it's brownfields, it's probably got a better chance.
Absolutely. And then sorry, the final stage is mine exploration. Are they working on an old mine that is either shut down, or are they looking to expand the resources of a current mine?
Yeah.
Now that's the best chance. Okay. Right. That's looking for extensions of current mines or repetitions. And and that can take years. I mean, Fosterville is Fosterville, the world's best gold mine at the moment, is an amazing example where they were mining there for years, this shallow ore body. It wasn't great. And they were having trouble with the metallurgy, which means the recovery of gold. How much, if there's 10 grams of gold in your ore, when you process it, how much do you get out? If you only get 8 grams out, that's an 80% recovery. Well, I think Fosterville would probably have been down around the 50s or the 60s. I don't quote me on that, I don't know. But it had issues. And then, so they've been mining there for years. And as they drilled deeper, but there's a mine there, and as they drilled deeper and drilled around it, they say, oh, it's changing as we go deeper, and it changed, and then at depth, they discovered this amazing ore body after they'd been there for 10 years.
Yeah.
I mean, Kerry, I spoke at one of your conferences recently, and I spoke after Jake Klein from Evolution. Evolution's a fantastic Australian gold company, and both explorer and miner. And Jake spoke about a deposit called Lake Cowal, which they're mining now, and they've just discovered a new ore body at Lake Cowal. Now, I was drilling at Lake Cowal, I think in about 1996 or 97. So 23 or 4 years later, they're still making discoveries in and around the mine. Yeah. So that to me, and there's thousands and thousands of holes drilled there. So you've got to be patient, it's not easy. So we have green fields, low chance, brownfields better, mine the best. Okay, that's my ranking there. Then I think if you're going to look at a company, you have to look back through their quarterly reports and their releases and see, are they active? There are many companies listed on the Australian ASX, exploration companies that are not very active. They don't do a lot of exploration. And so you have to see, the only time, and this gets back to your question about technology, the ultimate test is drilling. You have to drill a hole in the ground and sample what you think is the gold deposit. And that's the only valid test in the end. And so if your company is not either drilling or preparing to drill or looking at the results from the last drill program, then you've got no chance to make a discovery.
So why are those companies allowed to continue if they're not doing anything?
I'm a humble Kerry, I don't know. I mean, and sometimes they're in transition, they've explored a property and they no longer think it's worth any more money. There's, that's always one of the most difficult decisions in exploration, I find, is that you've put money into a project, you've had some encouragement, but it's not what you'd hoped. Do you keep going like Fosterville, or do you say that's enough? And that's an activity that happens all the time in exploration, and it's the hardest decision because you get attached to your projects, you believe in them, you've championed them to the public, you've said this is great, and then you get the results back and it's not as great.
Yeah.
And so then that question is, do I continue, or do I stop putting good money after bad, and do I try something else? So sometimes companies are in transition where they've explored the projects that they have, and they're looking for new projects. So I don't want to be too critical, but I think that you have to be looking at that, and that might be a time thing, but you have to look at the company and say, if you look at the ASX and look at the companies, you'll see that companies take an uptick. Their share price goes up as soon as they announce that they're going to drill, even before they've started, even before they've done anything and have any chance of success. People are getting set already. As soon as a company says, I'm going to go and drill something and it looks good, their share price will start to tick up. Now, no, it's not going to double or anything unless people are really excited about it. And sometimes that happens. But a lot of that can be hype. If you look at exploration around a new discovery, people say, oh, well, they found this at this bullseye. And we've got a bullseye that looks exactly the same and it's 20 kilometres away and we're going to go and drill that. Well, often you see those stocks explode, but it's all hype. It's, but typically companies do appreciate as soon as they start to announce that they're going to drill.
Yeah. So that's quite, sorry to interrupt you, Andrew, but we're running out of time. So
I'm sorry.
Half an hour goes very quickly. And that's sometimes what you have to say to investors, that, if you're going to invest, don't put your house and your children on that investment. And certainly if the share price starts to take a run, perhaps it's wise to take your initial investment off the table and
Absolutely.
in the company, you keep going. But be careful. This is not an easy game, but it's a very, very rewarding game.
Absolutely. But I would say to your listeners, please don't put money into exploration companies, even mine, that you can't afford to lose. Okay. You know, it's a tough business. It's cyclical. Commodity prices, you can have a great project and the commodity collapses. You know, so
not the gold price. Gold price is keeping going.
No, not the gold price, but you know, I've been involved in other things. I've been in the cobalt boom. I've been in the uranium boom. You know, so and yes, the gold price is fantastic. And when you look at the gold price, for example, we've got a project in Brazil which we've had for just over a year. People always look at the American dollar gold price. Look at the performance of the Australian dollar gold price, the South African dollar gold price, the Brazilian real dollar gold price. The gold price in Brazil has doubled in the year that we've had that project. So that's a huge opportunity for us to make something.
I often say to people that don't, in Australia, they always say the gold price is, 1650, 1700, but that's a US dollar gold price, ladies and gentlemen. If you translate it into the Australian dollar, it's now at 2700.
Absolutely.
Ever been.
And in a country like Australia, all your costs are in Australian dollars. So it's ludicrous. Now, sometimes like when you're exploring in Africa, your costs might be in US. And so it's relevant to look at the US dollar gold price. But in countries like South Africa or Brazil or Australia that have strong economies and where you can source everything that you need in country, so you're not importing stuff from the US, technology or whatever, everything that you need is in country, then there's no need to look at the US dollar gold price. So Brazil, in that sense, like for us at the moment, it can present enormous opportunities to recast how you look at a deposit, because what was, at the end of the day, like I love geology and I love different rock types. The mining engineers, when they assess a deposit, only look at two rock types, waste and ore.
Okay.
Right? I don't care whether it's got gold of economic quantities or it's got none. And so, that definition changes with the price. So your ore body you can do nothing to your ore body, but it can grow as the price changes. If the price goes up, your ore body gets bigger because you can mine lower grade material. And so over time, that can have an enormous effect on an operation. And we're mining deposits now all over the world at a gram per tonne that was just, in the past, was just not feasible unless you could do 10 million tonnes per year. You could never mine at those grades. But now, because of the high gold price in a lot of places, you can mine at those low grades, and ore bodies have grown exponentially because of that. Because the high grade cores are often very small, but the low grade outside of that can be quite large.
And it can be very, very lucrative. Dr. Tunks, I'm afraid we're running out of time. And
I talk too much, Kerry.
I love chatting to you, but we got one. I want two things I'm going to ask you. What did you do your PhD in down in Tassie, and was it bloody cold?
Well, I did do my PhD at the University of Tasmania, but my field area was the Tanami gold mine in the Northern Territory. And so it's the opposite of bloody cold. It's bloody hot. And I spent months at a time out in the field mapping, and it was often hot, but believe it or not, as is typical with deserts a long way from the coast, they can also be bitterly cold. And, I remember swagging out and waking up at, as soon as the sun comes up, you're up and working, and the bitter easterly wind in the Tanami Desert in the middle of winter, that was no fun. But a long time ago. I'm stuck at home now. I'd love to be back out in the field.
And I think that's what people don't realize, is that you guys go out and you get a swag and you're in the middle of nowhere. You've got to take your provisions with you, and you've got to start looking and interpreting rocks. Fascinating time.
If I can finish on one thing, people don't understand, sometimes I've stopped looking at social media around exploration companies, not this sort of social media, but investor forums and they're critical of how slow you're going. People don't understand how tough our staff do it at times. They spend weeks, I heard about people complaining about COVID and being locked away for a couple of weeks. We spend months out in the field in remote locations. And back in the back in the 80s and 90s when I was doing it all the time, you know, we didn't have satellite phones, we didn't have GPS. You know, if you could maybe pick up a radio signal at night, you'd be out there for weeks and weeks. It's you know, we've got better communications now, but it's still a tough business. And spare a thought for those guys who work on these drill rigs in remote locations. It's a bloody hard. It's a hard yard.
Yeah, because most Aussies that are sitting there in cities, they don't realise these guys are out on these remote rigs for a very long time.
You know, we get malaria if you work in the jungles of Africa. You know, I've had, that all of these things, dengue. I mean, you know, like, so it's a tough. I'm not saying, you know, I'm not crying poor here. I've loved every moment of it. I've had an amazing career and seen the world, and I love going to remote locations and seeing meeting people and the way they live, and it's an amazing opportunity. But it's a tough business, and that of course slows us down as well. You know, transport to and from site, all those things, logistics. But when you make that discovery, when you drill that hole and see that piece of gold, you know, last year my company drilled one of the best intercepts on the ASX, 25 meters at 95 grams. When we saw that gold come out of the core, my God, you should have heard the celebrations. It was just amazing, you know. So it's an exciting business. I'd never think about doing anything else.
Andrew Tunks, Dr. Andrew Tunks, thanks for talking to the Gold and Alternative Investment Show. We appreciate your time. I'm sure I'm going to get some comments and feedback, so maybe in a few months' time we'll get you back on to answer those questions. Thanks,
Kerry. It's been my absolute pleasure. It's always wonderful to see you.